Thank you very much indeed to Sarah Pritchard, Executive Director for Markets at the FCA, and to Phil Venables, Chief Information Security Officer at Google Cloud, for this fireside chat. What we would like to explore are issues around operational resilience, but also focus not only on the risks, but on the opportunities that cloud technology could bring to the financial services sector. With that, maybe, Sarah, I pass over to you. I know operational resilience is a key priority for the FCA over the coming years. Maybe you would like to elaborate on that a little bit.
Well, thank you, Nick, and thank you very much for inviting me to join this roundtable today. As you already touched on in your introduction, it's really important that we think about not just the risks of cloud technology, but also the benefits and innovation too. And at the FCA, we believe that innovation is key to delivering better outcomes for consumers, firms, and financial markets. We also recognise how digital transformation is redefining markets and the potential opportunities. We've seen a big move to digitisation, and particularly accelerated through the COVID times. Last year in 2022, we launched our 3-year strategy with 3 core aims: reducing and preventing serious harm, setting and testing higher standards, and promoting competition and positive change. In that, we signal operational disruptions as a key area of focus. And while we know that operational disruptions are inevitable, we're seeking to ensure that important business services provided by firms are resilient to operational disruption so that the impact on consumers and markets is reduced. So what have you seen from the FCA, and what will you see from the FCA? Firstly, I'd like to talk about the work that we did jointly with the Bank of England and the PRA last year, which required firms to identify their important business services and to set impact tolerances against those, and critically to test against those by March 2025. And then secondly, and no doubt something that we'll speak about a little bit in more detail later, is the work on critical third parties, where we recognise that there's an increasing number of outsourced third parties who are providing important services to financial services. And we recognise that without greater scrutiny and greater regulation of those services, we believe that there is risk to the UK. And so some of the work that we're doing jointly with the Bank of England and the PRA and with Treasury too is to introduce a new regime for what we're calling critical third parties.
Phil, maybe I can pass over to you as well. How do you see the role that cloud plays in the transformation and digital transformation of the financial services industry?
Yeah, I mean, it's interesting. I think we see society overall and businesses are becoming ever more digitized. And as they do that, the operational resilience that they have to deal with has just become a much more significant area of focus for more organizations. And as part of that, they look across all of their processes in the context of digital transformation to look to see how they can improve their management of all of their operational risks, but especially resilience. And in that context, we see cloud technology helping many organizations and especially financial institutions in many ways. This is everything from improving their security posture, because most of the cloud providers, especially us, have focused on building security in, not bolting it on after the fact. There's also significant help in meeting their compliance requirements, where again we're able to support approaches like compliance as code, where it's just built into the systems, all the way through to some of the more extreme related risks around climate and other related risks, where cloud has some more intrinsic sustainability and energy efficiency properties. But overall, we see many institutions increasingly focus on their technology modernization to take advantage of cloud by moving away from hard to maintain, hard to secure, and quite brittle legacy systems that impinge on their necessary agility needed for their overall resilience. And finally, I would say is we're also seeing many organizations, because of all of that, realize cloud is now less of a risk to be managed and more of a means of helping them mitigate a wider array of operational risks, while yielding that kind of dramatic improvement that helps them do that technology modernization. So again, seeing cloud as a means of mitigating risk, as opposed to just seeing it as a risk in and of itself, is probably the big difference we're seeing across most financial institutions now.
I want to come back to the benefits in a moment, but before doing so, just drill down a little bit more on the risks, which from a public policy perspective are important. Sarah, you had already referred to this concept of a critical third-party provider, and in the EU that's also covered in DORA. Obviously, I could assume that cloud operators such as Google Cloud might be designated as such, but it'd be interesting to hear a bit more how you think about categorizing who is a critical third-party provider, and if so, what does it mean? And in Europe, we've moved to an oversight framework, which is not quite the same as supervision, but it's not quite different either. It'd be interesting to hear how you are thinking about that and how you're working with the bank in developing a framework around CCTPs.
Well, you're quite right, Nick, to say that the UK framework is under development. There's two elements to this. Firstly, within the Financial Services and Markets Bill, which is currently going through Parliament, the legislative framework for designating a critical third party is contained within that bill. And that sets out that it will ultimately be for HM Treasury in the UK government to designate critical third parties, but they will do so having sought input from the FCA, the PRA, and the Bank of England, and other parties too. Critical third parties will be designated if failure in or disruption to the provision of services to firms or financial markets infrastructure could threaten the stability of the UK or the confidence in the UK financial system. And we'll be looking to risks in terms of financial stability, market integrity, and consumer protection. Now, alongside that legal framework, the supervisory authorities are giving some thought as to how that regulatory framework would operate in practice. And there was an early discussion paper last year, which closed at the end of the year, that we are working through the responses for currently in advance of consulting on rules later this year. We've set out in that discussion paper that we will need to think around a framework for identifying critical third parties, mapping the services that those critical third parties provide, testing, how those critical third parties will engage with regulators and share information with regulators. We've given some thought and set out some proposals around what's called the financial sector continuity playbook. So how would those critical third parties operate in circumstances where the services to the financial sector are disrupted? And then clearly elements such as post-incident communicating, learning and testing too. That framework is under development, and we've had a huge number of responses to that discussion paper, which, as I said, will inform the consultation on the regulatory framework through the course of this year. I think what's important in terms of size and scale, I'm often asked, well, how many critical third parties do you envisage? I think we've said previously that in 2020, data showed that over 65% of UK firms use the same 4 cloud providers for cloud infrastructure services. So to start with, we imagine it will be a relatively small number. But as I said, the framework is under development at the moment. And critically, what it's focused on is ensuring that where services are provided by critical third parties, ultimately the firms remain responsible and accountable. But equally, there are some risks that no one individual firm can manage when you look at the risk that there might be a multiple number of firms using the same cloud service providers, such that if there was disruption, that could have a much broader impact than simply on that one individual firm.
Can I ask 2 follow-up questions, Sarah? One is, you already mentioned that the firms remain ultimately responsible, but where do you see potential for efficiency gains for the supervisor or individual financial institution? So if they know that, let's take a cloud operator, is designated, does it give the financial institution any comfort in their own outsourcing policies, or is it just an add-on? I think that's the first question. The second one is international consistency. We talked about DORA already. The US Treasury has convened a group, an oversight group or an advisory group between different jurisdictions in which you're part. So how do you see the issue of international consistency, given that so many financial institutions are global in their activities?
Let me start with that point on international consistency, because as you say, it's important, and we very much are supporting work on the international stage. So working with G7 partners, partners in the Financial Stability Board, partners in the UK-US dialogue. And through that work, very much looking at common definitions and terminologies, common expectations for third-party risk management and oversight. And I know when we hear the importance from a firm perspective, but also from the third-party perspective on having a common basis for an international framework, particularly as these services are inevitably delivered on a global basis. So that is something that is important, and something the reason why we are very significantly plugged into that international work to play a strong role in that context. I think you asked for what comfort can firms take if they are dealing with an entity that is designated as a critical third party. And at this stage, obviously, that is quite some distance away. We don't yet have the framework in place, and we don't quite know how that framework will operate in practice. It will be for Treasury to designate those critical third parties. What I would say is, regardless, it is important that firms understand themselves how their services are delivered and what reassurance they can take about the resilience of third parties that provide services to them. That is very much a common theme of our existing operational resilience framework, and that will remain a common thread through the critical third party work. But clearly, firms that are engaging with those that are subject to other regulatory scrutiny may well take that into account in their own internal risk assurance processes.
Thanks very much indeed. Phil, you already highlighted some of the opportunities out of the transformation and the use of cloud. Maybe to you also one last question around risks, because obviously institutions might be trading in a risk of fragmentation in current existing legacy systems by a new risk, which might be concentration risk by relying more on one provider. So maybe just respond to that, how you in Google Cloud are thinking through and contributing to operational resilience for the financial services industry. But maybe also give me a sense of one or two use cases where you collaboratively work with the financial service industry in not just contributing to operational resilience, but also to advancing their own objectives around delivery of services to clients.
Yeah, sure. So, I mean, clearly security and resilience and partnering closely with our customers to ensure their security and resilience is our absolute priority. And as we kind of talked about, I mean, cloud can improve security and operational resilience by providing a range of capability and options that most organizations can't marshal for themselves. And this is everything from how we help them architect their systems to take advantage of using the number of different regions and zones and different availability zones that are available to customers. And I think, you know, to the point of your question, we know that we have to partner with customers to help them re-engineer their environments to tap into that resilience, whether it's distributed storage, distributed processing, taking advantage of a lot of our inherent network resilience that we have because of the nature of our global services provision. But again, to this point of concentration risk, we're keenly aware of the need to manage and help customers manage concentration risk. So we're not only focused on assuring our own resilience and working with customers on their multi-regional deployments, but we're also increasingly supporting multi-cloud operation. That could be either deploying our software into other clouds so customers can use multiple clouds, or driving and sustaining the use of open standards and open source to give customers some options on portability, especially in stressed circumstances, because not all customers are going to want to be in multiple clouds as regular operation. They want to take advantage of particular efficiencies of being in a specific cloud, but then under certain circumstances they want to be able to assure that they have that portability across different clouds. And that's where we, and I think the other cloud providers, should also heavily commit to open source and open standards. And then finally, you know, we believe that we have to keep engaging with regulators. We are doing with the in the UK on the proposed approach that Sarah talked about, and also we've been heavily engaged with the EU on DORA for the last few years, and now that DORA is completed, we're preparing for that compliance as a top priority. So we essentially see this as a very close partnership with our customers to help them how we think about our own resilience and how we partner with regulators to provide assurance that we're managing and helping everybody mitigate systemic risk, particularly in relation to concentration risk.
Maybe also as a follow-up question, again, the question on international cooperation, because obviously you're trying to develop approaches that can be used by a financial institution at the group level. You don't want to have different approaches in different jurisdictions, even though you said you will adapt to multi-regional approaches. So how do you see this work on global convergence, and how much of a barrier is it for you to have clients that operate in multi-jurisdictional contexts?
Yeah, well, so we see a lot of commonality emerging in much of the regulation, but there's also sufficient differences that we spend a lot of time partnering with customers on how they conform with particular regulations in all of the countries that they operate in. But fundamentally, we kind of take a highest common factor approach across our global infrastructure, that we want to make sure that we're supporting all of the relevant security and resiliency and other required controls in everywhere we operate to meet that kind of highest common factor approach. But again, one of the things I think the advantage of the scale of cloud, particularly for our multinational, if not global customers, is they get to tap into a consistent infrastructure that satisfies their objectives in all locations. And again, a big part of that is working with them to modernize their systems so that they can take advantage of that global resilience. But we spend a lot of time with regulators, not just in financial services, but in all parts of the critical infrastructure around the world, to engineer those controls consistently across the platform. And we think that's, again, one of the advantages of cloud, that enables customers to have that consistency in those higher levels of resilience and control. But we continue to partner with regulators and customers to make sure we keep doing that.
Thank you. I was just thinking that from a European perspective, those who designed the GDPR or some of the standards that they want to externalize to the rest of the world will love hearing that you take a race to the top, so to speak, in adopting rules. Maybe closing, Sarah, you started talking about the risks, and Phil started talking also about the opportunities, maybe focused more on the opportunities. I'd be interested also from a supervisor's perspective. You, of course, are also looking at some of the opportunities of technological adoption and cloud adoption. And maybe it'd be interesting to hear how you view things. I know you organize a lot of workshops also with the FCA, with innovators to think through how technology might transform the industry. I'd love to hear your views around the FCA's approach to adoption of new technologies in the financial services sector.
So look, supporting innovation is a really key priority for us at the FCA. We know that there are many innovative business models, many new technologies, and we have a really successful, I think, globally copied regulatory sandbox approach where we previously operated at only certain points in the year. We've now switched it to an always on capability, recognizing that we very much want to be here to support firms, digitize their product offerings and use new services too. And you're absolutely right to talk about the opportunities of new technologies as well as the risks. And that innovation pathway service, we hope really provides a good platform and a good testing environment to work that through. In a slightly different context, in financial crime, we see some really good use cases in relation to technologies. We see the use of AI in terms of developing red flag indicators for AML and fraud typologies. We've ran an APP tech sprint jointly with the payment systems regulator towards the end of last year, looking at how data sharing can be improved to help spot fraud at source and how to help spot fraud on a much more real-time basis. So there are many benefits and many good use cases for technology and for technology at the scale that Phil is talking about. And we at the FCA very keen to support that through our innovation pathway service and through the focus that we really have on innovation through our new 3-year strategy.
Thank you very much indeed. I think this has been a fascinating discussion covering both some of the public policy challenges, but also importantly, the opportunities of new technologies. Sarah, thanks so much for being with us. I know it's a busy time for you, so we really appreciate it. And obviously the same for you, Phil. I know you're traveling to Europe next week. Thanks for being with us, and speak to you soon.